All right, well, let's switch gears for a second because 6 of Canada's largest investment firms are banding together to compete with the Toronto Stock Exchange. The new exchange, called Equatus, is presenting itself as an alternative to what it considers an unfairness of high-frequency traders. To find out what traders think, we're joined from the TSX by Diana Avigdor, head of trading at Barometer Capital Management. Diana, great to see you.
Thank you for having me.
Let me ask you, Diana, does Canada need another trading platform?
You know, there is a ton of fragmentation. I mean, going back to the beginning of all of this, the demutualization of exchanges, and whether that was the right decision at the time or not, that's a totally different conversation. But we're so far along the path of exchanges being public and all the fragmentation and new exchanges. The U.S. has a lot more. So that's a different conversation, and that touches on all kinds of other market structure stories like market maker-taker model and the high-frequency tradings, the HFTs as we call them. Those were the unintended consequences of the exchanges being public. So do we need another exchange? That's a great question. The short answer is no, but because Canada is a small country and we already have a few exchanges. However, conceptually what they're proposing seems great, but it's still formative. So we still don't have all the details. We do have all the positive sound bites coming from the announcement. So our first initial response is great, bring it on, no high frequency trading, and not all high frequency is bad, but no bad high frequency trading. So we'll see how it turns out. It'll depend on fees, of course, as all exchanges basically cost us money in data fees.
Yeah, that's right. And you think, looking at the fee structure, that the cost could actually go up for some traders?
Well, the costs in the form of data feeds for sure will go up. I can't see a situation where any exchange will waive data fees. You have to get that data fed into your computer to see those quotes. Otherwise, you're not up to date on perhaps price. B, you may not be up to date on volume. So if you're a broker and you're subject to national best bidder offer, you must pay those data feeds. If you're a buy side, which is an asset manager, and say an institutional asset manager, you also need to have clear information, and you need to invest in a technology that brings all this fragmentation back together. Smart order routers, all the different algorithms that basically give you access to the best price on whatever exchange. And the consortium even, actually I think ITG came out and said there's nothing's going to change in the way they trade because they're still not going to make a preference if a better price is found elsewhere. So it's all about the price anyway, and you need to bring it together. But the cutting out of the high frequency trading, which some believe is toxic and noisy, could be interesting to see.
Diana, CIBC says that the dealer community has been battling with the TSX for years over fees for data. They don't like paying the high fees. Now, is Equatus planning to do anything different here on data feeds?
Not the data fee. I'm not sure what they're going to do about the data fees. I don't think they announced anything on the data fees, but they haven't announced anything in terms of what the structure of the fees are going to be. What we're also talking about here is the maker-taker model. It's where companies get certain rebates for trading in a particular way, and that is what is referred to by rebate arbitrage. And that's what the announcement said, that they are seeking to cut out the rebate arbitrage and latency arbitrage, which is the time it takes to get to different exchanges. So we don't have, I haven't seen any announcement on what the fees are, and I don't think we will. They still have to apply for regulatory approval.
Diana, what do you think about the volatility that we have been seeing in the markets right now, and particularly here at home and on the TSX?
I think that there's been a lot more volatility than weakness. There has been weakness, 5 to 7% across all markets for sure, and especially on the high yield dividend, particularly the stocks that have been considered to be safe. The volatility is really high, and as in the bond markets, the bonds are supposed to be safe, and that has been extremely volatile. I think that we're repricing. I think that we need to find out how much money is going to rotate away from the fixed income markets. I think the volatility continues for a while, unfortunately. And I think that we're going to see more volatility than weakness. Markets are, we don't think they're in a bear market. And, you know, we've seen Fed officials coming out saying, you know, you misunderstood. Different Credit Suisse, for example, is saying stay overweight equities despite the volatility. But I think we have volatility here to stay for at least a month or two.
You're looking for market leaders based on price action, Diana. Can you give us an example of what you're talking about?
Yeah, well, right now, one of our other disciplines is that we also have very disciplined selling strategy. And as markets come off, our trailing stops kick in, and we organically end up raising cash. Relative strength is when a sector or a stock behaves differently than its peers. Now, that can be on the downside as well. You can say a stock that doesn't go down as much as its peers, but that's not what we at Barometer are looking for. Of course, we're looking at those stocks that are going up more than its peers. Right now, as the market is repricing, no, we're not necessarily in buying mode, but we do watch for the differentiation between economically sensitive dividend growers or yielders and interest sensitive yield givers and growers. So there is a differentiation, and when we look at the internals of the market, we see financials, some industrials, rails, semiconductors, some technology, large cap are acting better than, say, materials as we've known, and golds. And so those are the relative strength, and that's where we're looking to invest.
Yeah. All right, Diana, thanks for coming on our show today.
Thanks for having me.
Diana Avigdor, Head of Trading at Barometer Capital Management.